Morning, Mark Chameleons. How you doing, Dima?
Good morning, Will. How are you?
Great. This is my last day broadcasting from Boise, Idaho, everybody. This is Boise in the background. It was actually Goat Roper, the Goat Man from Texas, who made the guess yesterday. Boise, Idaho, and Jen, the most famous chameleon realtor from Boise, Idaho, lives there. So there you go. Question of the week, won by Goat Roper. That's his second cup. He and his wife are going to be able to have coffee together with the Chameleon Cup.
Sweet.
Yep. So with that, we will share the screen and get the disclaimer up. What do you think?
Yep. Good morning, everybody. Thanks for joining. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for. They should be able to help answer your questions, provide you with guidance. With that, Will, I guess we could get started. There's the disclaimer.
Perfect. What are you seeing this morning, buddy?
Let me share my screen real quick. And let's take a look what's going on in the pre-market hours. So I think we'll take a look at what's going on in pre-market hours, take a look at what's coming up in the earnings front, maybe look at some option spread ideas, take a look at maybe another screener if we have time. And of course, if you have questions, Will, let me know along the way. I'm going to try to get to the questions, as many as we can.
Cool.
So this is stocks trading in the pre-market hours. We got the most active stocks, biggest percentage gainers, biggest percentage decliners. Let's take a look really quickly what's going on in the higher market cap stocks. I'm going to use this filter to look for stocks with 20 billion market cap or higher. So we got a few of them popping up here. BNXT up 6.2%. Let me just see really quickly. And that looks, what is that? Like a biotech company working with Pfizer.
Yep.
That's up today. ROST. Let me see. I feel like I saw a couple other ones in the morning that are not in here anymore. But I'm not seeing. I thought I saw a few other no names, but they're not appearing. Pfizer up 1.5% this morning. So we got 15 that made the percentage gainers list, 3 on the percentage decliners list. So it looks like, probably not that many on both lists. A little bit more bullish than bearish. Looks like at the opening, but probably closer to unchanged. Let me take a look at the unfiltered list, see if it pops up, because I thought I saw some interesting stocks here. There's one, AYRO, up 35%. I know I saw that one yesterday was on our big percentage gainer list that was intraday. I believe that's also a stock in the automobile industry, right? Auto manufacturing. So here it is. It was up 45% yesterday, closed at 618. Today, trading $8.29, new 52-week high. That's up 34% in the pre-market hours, trading 10.4 million shares compared to a float of 21.8 million. So on a relative basis, very active in the morning. Here's what the chart looks like pre-market. Highest VWAP bar is $7.73 to $7.95. Here's some news coming out. It looks like what they reported earnings this morning. So that's a big on earnings. Let's take a look at the historical. So they don't have that many earnings. So this is a relatively new stock here, AYRO. But here's what, let's take a look. These are similar stocks. Just want to see in that group, in the auto manufacturing group, what else is moving in the pre-market. So I sorted here by biggest percentage gainers in the pre-market. So here's that AYRO made the top of the list. Next one, GP up 7%, WKHS up 2.9%, Nicolot up 2.3%. We could see here that AYRO is up big this month. GP up big, 73% up this month. Let me see if we could take a look at the, I don't even think we have enough fundamentals actually here. There's only two earnings releases. So it's a low cap stock, relatively new, but that one was up yesterday big. I know it made one of our percentage gainers list. So we'll see what happens today.
Chances are it was one of those SPACs that was listed into this. There are a lot of people who are interested in these emission-free, vehicles. It seems almost like they're smaller. I don't know if you've ever seen. I mean, they're basically almost a golf cart, but they do have a back where you can put materials in. So it's an small electric vehicle is what they're selling.
Right. And these things have been on fire lately. So it's we were just mentioning this morning. And so how unpredictable things can be when you think like when in a global economic pandemic when more people are forced to stay at home, you wouldn't think that the auto manufacturing business would be booming like this, right? Making like new all-time highs basically and doing these types of percentage gains. But everybody's excited about these, you're right, electric vehicles. So up 31% today in the pre-market hours.
Yes, as Jake says, green makes green. Actually, for everyone who doesn't know, Jake is a real contributor to the Chameleon community, and he set up a Discord group. I put a link in the chat. I suggest everyone. I know Dmitry, you joined. I joined. He always does great things, Jake. So he puts great ideas in the group, and it should be a fun chat. So there's a link to register for that.
Very interesting. Yesterday was the first time I used that software Discord, but yeah, Jake was in there. There are a couple ideas there. People were posting that.
Yeah, I think Raj, who's another contributor.
Putting in ideas and it's a great way to just kind of bounce around ideas intraday, see what things are moving, and kind of go through the logic of what led you to this to this decision. So really interesting, and I know a lot of people were asking about like creating a group with chat, being able to bounce around ideas. So so thank you, Jake. Let's take a look at, I guess I'm going to go, if there are no specific questions, I see some other top gainers, but, on lower amount of shares, 57,000, 74,000. This one just popped out because it's trading 10 million shares in the pre-market hours. If you don't have any questions on the pre-market, I will take a look. Let me just see really quickly if I could take a look.
Just so everyone who's not watching the chat knows, we had a couple comments about the stock you were just talking about, AYRO. Yeah. And I think it was Mike Palmer was saying it's a big product already in use on college campuses, where you have small paths and you're doing work on the campus or making small deliveries. It's being used in those type of situations around the country, says already. So.
Oh, really?
There you go. Yep.
Oh, it's interesting. Well, I'm going to take a look before I move on. I'm going to take a look here in the last 2 weeks. We capture every stock that is moving and opens up or down, has a gap move up or down. And then we just track what happens to it the first half hour from the opening price and what happens to it from the opening price to the close. Like, is there follow through? So here, I'm going to just, what I did here, I'm going to do the unfiltered list first. So these are broken down stocks that gapped up in the morning. So in general, in the last 2 weeks, here's the full list, 3,642 stocks that gapped up in the morning. And then we track what happened to it in the first half hour. So 48% of them from the open price were higher, 51% were lower, with an average gain of 0.1%. From the open to the close of the day, 53% of them finished higher from the opening price, 46% lower for an average gain of 0.4%. So you see, at least statistically, those that gapped up in the last 2 weeks favored a little bit more, towards the bullish side by the close of the day. They continued higher, 46 lower for an average gain of 0.4%. Let's just take a look, gap down. This is the reverse. So the stocks that gapped down, this is, all the stocks, no matter the market cap, no matter what industry they're in, these are all of them. We use that as the benchmark. So after opening, by 10 o'clock, the first half hour, 42% of them from the opening price went higher, 57% of them continued lower from the opening price, for break even around on average. By the end of the day, 38% of them were higher from the opening price, 62% were lower for an average loss of 0.6%. So what it's saying is, in general, in the last 2 weeks, stocks that opened higher continued higher by the end of the day more often than not, right? So on the gap up history, 53% of them closed higher from the opening price, 46 lower for an average gain. On the gap down, actually they continued lower. So those that gap down, 62% of them continued lower. By the end of the day, they closed lower than that opening price for an average loss of 0.6%. So let's take a look now. Now I'm going to use that filter because we've seen these auto manufacturers gapping a lot this week. So let's see what they tended to do. I'm going to take the industry and let's go to auto manufacturers over here. So in the auto manufacturers, out of the 3,642 observations that we had, 120 of them were in the auto manufacturing industry. So I'll give you an example here, like Tesla. On November 19th, Tesla gapped up 1.1% at the opening from the previous day's price. So it opened at $491.97. At 10 a.m., so that's at 9:30. At 10 a.m., it was trading $495.99, so gained an extra 0.8% by 10 a.m. So because that first half hour is usually very active, right? Then we kind of slowed down in the middle of the day. By the close of the day, Tesla finished $499.27. So from the opening, right, to the close of the day, it gained 1.5%. Okay, so that's how we're tracking it here. So let's take a look on average what this group did overall in auto manufacturing. So here's what the average is for all stocks. Here's what the statistics are for just the auto manufacturing. So in the auto manufacturing group, stocks that gapped higher in the morning by 10 a.m., 58% of them were higher, 43% were lower. That's compared to the overall group, 48% were higher, 51%. So those auto manufacturing did a little bit better than the overall group at 10 a.m. By the close of the day, from the opening to the close, 58% of them were higher, 41% were lower for an average gain of 1.6%. So at least those stocks that gapped higher in the morning in auto manufacturing tended to go higher more often than lower from the opening price and did a little bit better as a sector than the overall group. Does that make sense? Well, if not, if people don't understand, let me know.
Let us know, chameleons. Does that make sense to you? Made sense to me. Nice job, Dima.
All right, let's take a look at the gap down auto manufacturers that gap down. So this is on the gap down. So there were, on the gap down, out of 2,259, there are 44 of them that gapped lower in auto manufacturing, right? So this is how it would be, this would be market open, this one gapped down 2.3%, or this one by 10 a.m. from the opening price, it was up 6.2%. By the end of the day, it was actually up 16.7%. So this one gapped lower, 2.3%, but reversed and went higher. So let's see what happened on average in this group. So on average, actually in auto manufacturers, those that open lower, gap down, only 34% of those observations went higher, 64% of them went lower. For like a break even on average, those percentages were insignificant. By the close of the day, and this compares to the overall group here, so here it did worse. By the close of the day, 39% of them were higher, 61% lower, but an average gain of 0.6 points. So what this is telling me here is that more often than not, if they gap lower, more frequently, they continued lower by the end of the day than went higher. But those that did go higher, bounce, were more significant. Those average gains still, you see here, on average, this was down 0.6%. The average here was 0.6% higher. So let me just take a look here.
I'm just confirming before I type it in. This is not a new feature. You're just walking through a feature that's
this is already existed, right? Everybody could use it. You just have to kind of scroll. So once you see your pre-market movers, there are a couple ways to analyze it. You click on it, and then you could go in there and start analyzing the specific stock, right, and kind of compare to historical gaps. Using the historical data for that specific stock, compare it to similar stocks. But if you want to scroll down further and compare it to industries, right, the gap history for the overall market, just scroll down here. This report is right below it. So what I'm going to do here is, these are looking at just gap down, right? There are two reports, gap up, gap down. This is looking just at the gap down report in auto manufacturing. And I'm going to take a look why this is, because 61% of those stocks went lower, but the average gain is 0.6%, right? So your average, on average, they still gained. So what I'm expecting to see is some big moves to the upside. And I'm going to go here, performance to the close, and I'm going to sort it by percentage change. So you could see here the worst one, gap down, was down another 9.6%. Here, workhorse from the opening price. I'm going to do it the other way. So we see here GP up 22.9%. So even though we've seen some big, some stocks gap lower, but by the end of the day, some of them really gained, some big percentage moves here, right? And we could even filter that down. Let's see what happened in the higher market cap ones. So over 10 billion. So the ones that were over 10 billion did actually a little bit better, right? So look, as I'm increasing it, let me see, 50 billion. It's over 100 billion. That's only Tesla. Let me see the ones that are under 1 billion. So see the ones that were under 1 billion, the smaller cap, even here, they tended to go down more often than not, but you could see that the average returns were still positive, meaning that the ones that snapped back, had big, at least this one over here had a big percentage gain. So anyway, that's a really quick way just to see what tended to happen within that industry. If you don't have any questions, I'll move on.
Yeah, you can move.
Let's come up to the upcoming earnings. So let's take a look for what's coming up in the earnings for the next 2 weeks. I'm going to switch to this report. These are stocks expected to report earnings in the next 2 weeks. I'm going to filter out for stocks that trade at least 5,000 option contracts or more per day. And let's take a look at what's going on here. So this is next week. There's one NTNX, November 23rd, expected to report after market close. The straddle is implying a move of 14.3% in either direction. That's buying a call, buying a put at the money. That compares to a historical 4-quarter average move of 20.6% and a historical 12-quarter average move of 15.6%. So we see it's 6% below that 4-quarter average, 1.2% below the 12-quarter average. The high move on that stock in the last 12 quarters, 32.7%. MDT, that's November 24th before the market opens. Right now, that straddle is implying a move of 3.9% in either direction. That compares to a 4-quarter average move of 2.3% and a 12-quarter average move of 2.6% with a max move, the high move of 5.7% in the last 12 quarters. Let's see here. Let's do a couple more. I think what's that? DKS, that's expected to report November 24th before the market opens. As of yesterday's close, that straddle is implying a move of 10.1% in either direction. That compares to a 4-quarter average move of 10.5% and a 12-quarter average move of 8.1%. So we're like right near that 4-quarter average, a little bit below 0.4%, 2% above the 12-quarter average. The high move on that stock, 25.8% in the last 12 quarters.
Hey, could we dig deeper into that one, see if there are any option strategies, like an alert detected or anything going into the earnings?
This one, DKS?
Yeah. Dick's Sporting's good.
Okay. So let's take a look in here. So there are a couple option strategies detected. Before we go in there, let's just take a look historically what this stock did, and then I'll see what popped up here. So here we see these bars here. This is the expected move in either direction. That's why I see up or down from 0%. So the straddle, when you're buying a call, buying a put, you needed to move beyond that, the cost of that straddle and make money. If you're selling it, you needed to move below. So here I'm going to hover over as an example, August 26th, before the market opens. Before the market opened, DKS announced earnings. That day, the stock was up 15.7%. That compared to the implied move of 8.7% in either direction. So you see to the upside, it busted through that straddle. That's why that green bar is telling you the actual move. And we see that it went right through that bar, just like it did over here on November 26th. This red one is indicating the move to the downside. So on March 12th, before the market opened, DKS reported earnings. That day was down 11%, and that straddle was predicting a move of up or down 11%. So that was like right in line with the expected move. And here we see, a couple times it broke. When it broke through, it looks like by a lot, especially to the upside. But there were a couple times here where, the move was very muted as well. So let's take a look at the averages. This is what the options tended to do. So the option straddle overestimated the move 75% of the time in the last 12 quarters. So 75% of the time, that move was more muted than the expected move. On average, the predicted move up or down in the last 12 quarters was 10.4%. The average of the actual moves in absolute terms was 8.1%. So we see about a 2.3% differential between the implied move and the realized move. And that's why we see if you're along the straddle, basically buying the straddle day before earnings, selling the day at the end of the day, the next day, that was a winner 30% of the time. And on average, it would lost 12% on average. Here, long straddle, strangle, actually also only winner 27% of the time, but it actually gained 9%, probably because these wings over here were really moved. Credit iron butterfly, that's kind of the opposite way. You're betting on a more muted move. That was a winner 78% of the time for an average gain of 89%. And here's the credit iron condor, winner 64% of the time for an average gain of 14%. Let's take a look at the implied volatility in DKS. So here's DKS. We're looking at the 30-day constant maturity. So an option 30 days to maturity, because we use the very near term options for the move, right? The longer dated options have a higher vega, so we're looking at as a benchmark 30 days out. And on average, the day after earnings, implied volatility was down 30%. So day before earnings, the average implied volatility is 57.6. This day before, day after, the average implied volatility is 40.7, down 30%. 5 days later, the average implied volatility is 40.4. So right, kind of stayed right there. And this is how it looks like. So this is 3 days before, as of yesterday's. That's where we are right now. Let's take a look at this alert, see what's popping up right now. So here, I'm going to just use the defined risk strategies. All right, that's how I'm going to. These are the undefined risks where you're short a put, which is harder because it could really go against you. But let's look at the defined risk strategies. So this is what it's shown up, that a credit put spread with an out of the money credit put spread, right? Selling 25 delta put, buying the 15 delta put. Historically, doing it 2 days before earnings, closing it 1 day after. At the last 11 observations, this was basically historically a winner every time for an average gain of 27%. So to do that, you would be on the November 27th expiration. You would be, I'm hovering over here without going to the options chain. So you would be selling the 51.5 put, buying the 49 put for 30 cents credit. Okay, that's 30 cents credit. We think it's worth 28 cents, so that's a little bit of edge over here, 2 cents. Diagonal put spread, selling the at the money near, buying an out of the money far put. Okay, so this is it's a diagonal spread. You're doing it in 2 different expirations. So doing this 2 days before, taking off day after, we had last 10 observations. That was a winner 80% of the time for an average gain of 25%. So here we're looking at also November 27th, you would be, so here's, I'm hovering over this. So the first month, let me see, you're selling the 56 put in November 27th, and you're buying the 51 put in December 11th expiration, okay, for 95-cent credit. We think it's worth 61 cents. That's a 34-cent theoretical edge. Here's another one, credit put spread. This is doing 2 days before and taking it off the day of the earnings. That was in the last 12 observations. That was a winner 83% of the time for an average gain of 20%. So here, November 27th, again, selling the 51.5 put, buying the 49 put, 30 cents credit. I think it's worth 28 cents. So it's the same strategy basically, except this one you're taking off a little bit earlier than this one you're taking off earlier than this one. So that's in DKS really quickly. Do you have any questions?
Any questions, anyone? People are pretty good. A lot of talk about Sono, which must have reported after hours yesterday, SONO.
Okay.
Jake was playing it even maybe after hours, it seems like.
Is this it? Sono?
Yeah.
29.87. Right. So let me see. Did that release earnings? Yeah. On November 18th, right? After the market close.
Yeah.
So that's, 29.8%. We're right up against the bell, Will. I'll let people go.
Awesome job, Dima. Another great show. Last show from Boise, Idaho, which is kind of cool. Jen, thanks for being a good sport all week and keeping your chameleon quiet on the chameleon chat. I know there were a lot of questions. Today we have people from all over: Czechoslovakia, Moscow, Australia. I mean, it's amazing. The chameleon community, really global. Very cool.
Yep. Awesome. Yeah, I was talking yesterday, someone from the Netherlands actually, that they want to do some like videos with Market Chameleon. They have like a big community of traders. So we'll see, if we could help them out, but they have based out of Netherlands, but they have people in the UK, France, like all over that Europe area.
Very, very cool. Well, thanks everyone for contributing. Remember to check out the Discord group Jake has organized. He's on the forum. He's got a big how to get in. So you can go to the forum and read about it. Thanks so much, Dima. You have a great weekend.
All right. Thanks, everybody. Stay safe. Have a great weekend. Hope to see you guys Monday.
Have a great trading.